Hi, Andrew Unknown here, A Unknown Mortgages. Welcome to the second episode of what I'm calling my New to Mortgage series. In this series, we focus on aspects of the mortgage industry that people who are not either part of the industry, like an agent, or maybe even a realtor, or people who've never had a mortgage before, or people who have had a mortgage but it was very straightforward and maybe don't really know what's going on, can find educational content about mortgages to learn more, both for your own, as a consumer of mortgages or as a potential person who works in the field. This week, especially with the Bank of Canada increasing their prime rate from 5.45% to 5.95% yesterday, I thought we would focus on one of the age-old questions in mortgages, fixed versus variable interest rates. So now, what does that mean? When you have a fixed rate, what that means is for the length of your term, the rate that you have will not change. For example, rates right now are prime rate right now is 5.9%. So typically, that means if you lock in at a 5-year term, which is the most common mortgage term or length of mortgage term in Ontario, that means for the entire 5 years that you have this term, your mortgage rate will be 5.9% and your payment will remain the same. This can provide a lot of stability if you have, if you're in a situation where you like to keep specific track of how much money is going to mortgages and you don't have a lot of, I'll say, disposable income, which a lot of people, especially with the cost of living at the moment, can definitely relate to. The other thing that fixed rate mortgages provide is they do provide a little bit of, like I said, stability, but they also provide that little extra bit of security for you, right? Stability if we know what the payment is, but stability in terms of your finances, right? A variable rate mortgage usually has a little bit of a better rate than whatever the prime rate is. Usually it's prime minus something, so prime minus a half or prime minus 1, something like that. So that means the prime rate, whatever the prime rate is, minus a whole point. The good news, and the reason people tend to choose the variable rates or will choose variable rates is because when the rates do go down eventually, right, those rates, your rate will also go down, which means your mortgage payment will decrease. And typically, over the length of a 5-year term, a variable interest rate will offer you significantly more savings over the length of the term than a fixed rate mortgage will. Again, that is typically how they work. Not always the case. Sometimes rates go up. For example, if you went with a variable rate in March of this year, your rate has gone up since then. Again, that can be a risk. It is a little bit riskier in terms of your rate. But again, it doesn't have that stability, but it can also provide those extra savings, right? One of the questions that we as mortgage agents ask our clients is typically, what type of rate are you looking for, right? Whether they're a first-time client or they've had a mortgage before, maybe they don't know, right? If you're somebody who's looking for more stability and you can go with the fixed rate, that can be beneficial. But if you're somebody who's focused more on potential savings and slightly okay with a little bit of risk, that makes it possibly easier to go with a variable rate. Like, there are many different options for fixed or variable rates. There are many benefits to each one, and it's entirely personal, right? This is an entirely personal decision between the people purchasing the home or refinancing their own mortgage. This is something that your mortgage agent should discuss with you, and they should take what you are saying into account, right? They shouldn't just do what is best for them and what will, increase the mortgage amount. They should go with what you are saying as the client, because that they work for you. We as mortgage agents, we work for you guys. Our job is to help you make this process less stressful. So it's important that we are able to take what you guys are looking for and find your solutions within what you're looking for as best we can. Anyway, I hope that was a good introduction to the differences between fixed and variable rates. And I look forward to seeing you in next week's New to Mortgage series video.